Noted. Thank you. Good afternoon. Welcome to the Monetary Policy Stance Press Briefing. Let us welcome the following: Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor, Governor Ellie M. Remolona Jr., Assistant Governor Zeno Ronald R. Abenoja of the Monetary Policy Subsector, and Officer in Charge Dennis D. Lapid of the Department of Economic Research. Governor Remolona will now deliver the statement on the monetary policy decision. Governor?
At its monetary policy meeting today, the Monetary Board decided to reduce the BSP's target reverse repurchase rate by 25 basis points to 6%. The interest rates on the overnight deposit and lending facilities were accordingly adjusted to 5.5% and 6.5% respectively. This will take effect tomorrow, October 17, 2024. The Monetary Board's decision is based on the assessment that price pressures remain manageable. The risk-adjusted inflation forecast for 2024 eased to 3.1% from 3.3% in the previous meeting. However, the risk-adjusted forecasts for 2025 and 2026 have increased slightly to 3.3% and 3.7% respectively. Nevertheless, this outlook is safeguarded by well-anchored inflation expectations. The balance of risks to the outlook for 2025 and 2026 has shifted to the upside, owing mainly to potential adjustments in electricity rates and higher minimum wages in areas outside Metro Manila. Meanwhile, downside factors continued to be linked to the impact of lower import tariffs on rice. The Monetary Board expects domestic economic growth to continue to be strong. This reflects improved prospects for household income and consumption, investments, and government spending, which are supported by the start of the monetary easing cycle in August and the announced reduction in reserve requirements in October. On balance, the within target inflation outlook and well-anchored inflation expectations continue to support the BSP's shift toward less restrictive monetary policy. Nonetheless, the Monetary Authority will continue to closely monitor the emerging upside risks to inflation, including geopolitical factors. Looking ahead, the Monetary Board will maintain a measured approach in its easing cycle to ensure price stability conducive to sustainable economic growth and employment. Thank you.
Thank you, Governor. At this point, we would like to request Assistant Governor Abinoja to elaborate on the BSP's inflation forecast for 2024, 2025, and 2026.
Thank you, Elisha. Again, good afternoon to our colleagues and all our participants online and here at BSP. So perhaps before I share the forecast based on the both for the baseline as well as the risk-adjusted forecast, may I just highlight that the relevant horizon that we consider right now is the 2025 to 2026 inflation outlook, given that we are almost at the end of 2024, and given that the monetary policy impact on the economy lasts or extends beyond 12 months up to 18 months before the peak effect is actually experienced. So as the governor has mentioned, but for completeness, I will provide 2024 forecast. So for 2024, the risk-adjusted forecast is 3.1, 2025, 3.3, and 2026, 3.7%, respectively. And if we compare this, if you can recall, if we compare this from the last Monetary Board meeting, the 2024 number is slightly below. Previously, we were looking at 3.3% average inflation rate for 2024. But for 2025, it's slightly higher. It was previously at 2.9, now it's 3.3. And for 2026, it was 3.3 and now 3.7%. So what could account for the decline in the outlook for 2024? We have seen, for example, the last two inflation prints for August and September reflect slowdown in rice inflation and other key commodities, including for vegetables and some cereals. So this has affected the outlook for the rest of the year. For 2025 and 2026, we are seeing a higher, slightly higher, but still within target inflation averages. And the slight uptick is due to higher global oil prices, which we have also observed the past few weeks, as well as some positive base effects in the next 12 months. So, but this could be partly offset by the lower world non-oil prices that is being seen, for example, by international financial institutions. So this is the outlook in terms of risk adjusted inflation numbers. If we go to, I remember some would ask about baseline forecast. So let me just share also the updates on the baseline forecast. Again, starting with 2024 for completeness. For 2024, it's 3.1%. For 2025, it's 3.2%. And 2026, it's 3.4%. Again, all of them showing that inflation will average within the target for 2024 up till 2026. 2026.
Thank you very much, Assistant Governor Abinoha. We will now proceed to questions from our media friends. We will begin with reporters who are here today. Reminder, please to raise your hand and wait for the microphone to be handed to you. Kindly state your name and identify your media organization before asking your question. And then for our online media friends, you may send your comments to us through our live Facebook broadcast or messages through text, Viber, or Messenger. So we can begin.
Governor, good afternoon. I'm Cliff Benson from Bloomberg. Given that the balance of risks to the outlook for 2025 and 2026 has shifted toward the upside, is a 25 basis point reduction in the key rate still possible in December? Okay, thank you, Governor. And also, some economists have suggested that there are chances of a 50 basis point reduction on the key rate also in December. Is 50 basis point something that's on the table for the December meeting?
I think unlikely. I think what would make 50 basis points possible would be a scenario in which we see a hard landing. But otherwise, I think that's too aggressive a cut.
Thank you.
Thank you. We have a question on the other side, please.
Governor, good afternoon. Mikael of Reuters. Given that we are expecting inflation to be within target from this year until 2026, what's the neutral rate that you are looking at now at this point?
That's a very technical question. First of all, let me say that we estimate the neutral rate, but our estimates tend to be very imprecise. We estimate it 3 different ways, and then we kind of make a judgment as to which neutral rate is most likely to be the right one. So when we present this to the board, there is a kind of a whole shaded area for the neutral rate, but somewhere in the middle, near the middle of the range, is a neutral rate in the middle of in terms of the real interest rate, is around 2%. But then you have to add to that inflation expectations to get the nominal rate. Inflation expectations, you might assume, is 3%. So we're looking at a neutral rate of around 5% nominal.
And related to because you've from the previous monetary policy meeting, the risks to the inflation was on the downside for 2025 in the previous meeting, and now it's tilted towards the upside. I was wondering if there will be some slowdown or some caution in terms of further easing by next year until we reach that neutral rate.
Say that again.
Given the upside risks, you mentioned that 25 BPS cut is possible in December. I wonder about the pace of further easing by next year.
Yeah, so we continue to update our calculations in the face of new data, and for now at least, the easing that we've been doing, and even the easing that we might do, we think that will still keep the inflation rate within the target range.
Thank you, Governor. Next question, please.
Good afternoon, Gov. Micah Arceo from the Manila Times. Since you adjusted the inflation forecast for this year, do you think that inflation will decline further in the coming months, lower than the 1.9% recorded last month. Thank you.
Decline in 2024. No, the last reading was 1.9. A big chunk of that, by the way, was because of base effects. Base effects would account for, I think, 0.86 of the 1.9. So without the negative base effects, it would have been more like 2.8 maybe. So it wasn't that exciting. It was exciting to us, but we have to take account of the negative base effects. It was still low even with the base effects, but not that low.
Thank you, Governor. Follow-up question, and then
So, are you expecting it to go higher this month?
I'm not sure, Zeno, but I think in 2025, most of the base effects will be positive. But Zeno has precise numbers.
Okay, thank you, Governor. But I'm looking at the last monetary policy report that was released in August. Just to have some reference. So what we are seeing is that if we look at the rest of the year plus the first half of 2025, inflation print might be slightly below the midpoint of the target. And then we can see inflation creeping up by the second half of 2025, but still within the target range. To some extent, that reflects what we are seeing, what we have mentioned before, possible higher oil prices than what was originally envisioned or seen for 2024 and 2025. So we might still see very muted inflation rates for the rest of the year and early next year, but with positive effects as the governor has mentioned, the inflation print might go up slightly by the second half of 2025.
thank you, AG Zeno.
Ditas Lopez from Bloomberg News. Gov, you have said that a 100 basis point cuts in the key rate for 2025 is possible. Is that still the case after the shift to the upside of the balance of risk? Thank you.
I would say 100 basis points in 2025 after the cuts we made in 2024. An additional 100 basis points would be somewhat on the dovish side. It's possible, but it would be somewhat dovish.
Thank you, Governor. Any other
Thank you.
questions? Question from Ian.
Hi, Gov. Ian Sigurel from The Inquirer. Gov, may we know your outlook on the peso? Because right now it's trading close to the 58 level amid narrowing chances of an aggressive Fed hike. So how, for the rest of the year, how do you see the peso behaving? Is it a concern? Thank you.
We don't have a target for the exchange rate, and B, the outlooks are really just for our calculations of we don't focus on what the exchange rate will be, but we have assumptions about it as best we can predict, and then it feeds into our model. But we don't target the exchange rate, so the outlook is not. It's just a tool for our calculations.
Thank you, Governor. Maybe we can go to the last two questions, or maybe the last question.
Hello, good afternoon, Governor. Louis Oxon from Business World. Just on the outlook for 2025, so is it more likely that we'll be seeing rate cuts in the 25 at that size of 25 basis points? As you mentioned, the 50 basis point cuts would would be in a hard landing scenario. So are we looking at, for example, the potential 100 basis points next year will be sized in 25? Is that how it would likely be for next year? Thank you.
So if we rule out a hard landing, then as I have said, we prefer to take baby steps in terms of adjusting the policy rate, meaning 25 basis points at a time, but not necessarily every quarter or not necessarily every meeting.
Thank you, Governor. If there are no more questions, we can conclude this press conference. Okay, we can accommodate one last question.
I got one last now. As the Philippine Central Bank announced its policy rate decision, the Thai Central Bank also announced a 25 basis point rate cut. We're waiting for Indonesia to announce the rates now. But I'm wondering the 25 bips cut of Thailand was a surprise. No, it was not expected. So I was wondering if you cut ahead of the Fed, and I was wondering if your decision in the previous months sort of affirmed, or this kinds of decisions sort of affirm what the monetary board did in the previous meetings.
We don't try to cut ahead of the Fed. We just cut when we feel we need to cut. What's that? Based on our data. So what the other central banks do also feeds into our calculations, but there is no effort to cut ahead of others. So we cut when our data says we should cut.
Thank you, Governor.
Thank you.
If there are no more questions, we would like to thank everyone for their time and attention this afternoon, including those watching us live on our Facebook page. This ends our Monetary Policy Stance press briefing. Thank you very much. Maraming salamat po.